So I think that you're right. We've seen a lot more interest from institutional investors. I think when it comes to licensed traditional financial institutions, they'll probably be more careful about aggressively trading Bitcoin and other digital assets like NFTs until the regulation remains patchy and unpredictable. I studied the NFT market, and that's certainly true for NFTs. For now, this market is, I think, largely sustained by people who have amassed a lot of crypto wealth. They have a higher tolerance for risk, and they're looking to invest their money in digitally native assets.
Nadya, I was very interested in the NFT market, and I thought, well, we might have something serious building here. And then I saw Melania Trump had put a picture of herself wearing white out there for £180,000. And then I thought, hang on, this is top of the market frippery. Is there something deeper that's more valuable about NFTs than just the sort of plaything of the rich and wealthy?
It's an excellent question. I think a lot of the attention over the last year has been on these sorts of popular collectibles and brands rushing in to increase virtual activity and digital ownership. Ultimately, I think down the line, NFTs do have the opportunity to extend beyond popular collectibles and investable assets and actually to form all kinds of digital ownership in interactive internet, in the metaverse, because they're very versatile asset that could be combined with other assets. So the question right now is, we see a lot of speculation in this market. And the question is there actual utility behind that? Actual products that people want to build and use? We're not seeing too much of this yet, but certainly with some infrastructure building, that could happen.
As I look at non-correlated traditional assets, maybe like artwork or classic cars, and I think about these are assets that may be stores of value as we see markets decline. Then I looked at the performance of BTC and some of the other cryptocurrencies through the last 24 hours, and I thought, hang on, they're all just correlated to risk and equity markets. Is there any argument to be made for these assets giving me any defensive profile at all if we see further selling across capital markets?
I think at the minute, NFTs in particular are not an effective store of value. They're way too volatile and also very liquid. But I would think of the NFT market as currently being a house with foundations and some scaffolding. And what it's missing is utilities. It's missing all the equipment and furniture for this to be useful. So if some of that economic infrastructure gets built, if some of those market mechanisms get built, then you can start thinking about creating some financial products around NFTs that will allow you to lease them, to get a loan for a mortgage, to maybe fractionalize them. All of these market dynamics that could make them more stable and more predictable. For now, I would say that they're not an effective store of value.